Hello and welcome. Today I would like to talk about how you can achieve returns of around 8 to 10% over time, as we discussed in the previous video. Besides of the time, the returns are the second important part for building wealth through investing. So let's start by looking at historical returns. This is important to understand how the different asset classes work and what returns you can expect. For example, you can see in this graph it starts from 1802 and goes to 2021. It shows the total return of stocks, bonds, bills, gold and the dollar. As you can see, the stock market outperforms all the other asset classes, especially the cash. As shown here, the dollar is losing value over time due to inflation. So actually you can see that $1 from 1802 is now worth just 0.043 cents. As you can see, the return of the stock market is around 6.9% after inflation. So that means the real return. So the takeaway is clear. Over long term, investing is always better than not investing. And among all asset class, stocks have historically the best performance, followed by bonds, bills, gold, and then cash. At the end, I would no one recommend to hold too much cash. So the time here, you can see it's nearly 200 years. Maybe it's too long. Let's have a look into the last 100 years. As you can see, we have the same effect here. So the stocks, again, the best performing, followed by bonds, real estate, gold, and then the cash. So this is of course also a very long historical period that we are looking at, which includes also major economic changes. Served as the gold standard. So while this context is valuable, it's also useful to look at more recent time frame. So let's take a closer look. For example, the past 30 years. The US stock market has grown significantly, from around 560 points to over 6,000. This clearly shows the power of long-term investing. If you invest, for example, 30 years, your outcome is very likely to be positive and often highly positive. Now, this data reflects the US market. Some investors may prefer more diversification, which gives you exposure to the global market, like the FTSE All-World index. Here's the return triangle. It's in Germany, sorry for that, but it's simple to understand. That shows returns for the FTSE All-World since 1994. On the y-axis, you can see the year of purchase. On the x-axis, the year of sale. For example, if you bought in 1995 and sold 2018, you would have achieved an average annual return of 7.86%. So again, over a 25 to 30 years period, returns typically range from 7 to 10%, depending on when you invest and whether you reinvest dividends. If you are not a fan of the FTSE All-World, you could also consider the MSCI World Index. Since its inspection in 1997, it has delivered an average return of about 8.61% per year. The past 10 years alone have seen average returns of 10.5%. Whether you choose the MSCI World Index, the Vanguard All-World Index, or the S&P 500 Index, it's absolutely realistic to achieve long-term returns of 8 to 10%. Personally, I prefer the FTSE All-World. While the returns may sometimes be slightly lower, it gives me global diversification and peace of mind. Here you can see the three indices compared with each other, that you understand the differences. The FTSE All-World is investing in the developed and emerging markets. The MSCI World just in the developed market. The S&P 500 just includes the 500 biggest companies in the USA. Then the number of stocks also, it's quite different. The FTSE All-World has around 3,900. The MSCI World has 1,500 and the S&P 500 for sure 500. Then you can see also the US rate. It's for the FTSE All-World 60%, MSCI World 70%, and the S&P 500 it's 100% exposure. These are the main differences between these three indices. I hope this video helped you understand how you can realistically aim for long-term returns of 8 to 10% without headaches by investing in broader market. Please remember, this is not investment advice. Always do your own research before making any financial decisions. In the next video, I will introduce the ETFs I personally invest in. If you found this helpful, feel free to subscribe, hit the bell icon, and leave a comment if you have any questions. Thanks for watching and see you next time.